By now, you've probably heard that Intel CEO Pat Gelsinger retired. What is left behind is an absolute mess. In Q3 2024, revenue was down 6% year over year. Adjusted earnings per share were also in the red. There is a ton of work to be done to get this business back into shape. What you're looking at here is a bunch of products and then the manufacturing business, Intel Foundry. We have thought for many years that there needed to be a split between Intel Foundry and the product design part of the business, much like AMD did with its manufacturing arm, Global Foundries, over a decade ago. Let's walk through the revenue segments. First, Intel Client, which is PC and laptop, revenue and operating income. This is the largest and most profitable part of the business. Next up, Intel Data Center and AI revenue, which kind of wants to compete with NVIDIA, but hasn't gained much traction at all in the data center, minimally profitable. Intel Network and Edge revenue, sizable little business here, minimally profitable. This thing addresses things like communications, networks, telecom businesses, or media businesses. Intel Altera, this is a field programmable gate array or FPGA business that competes with AMD's Xilinx or their embedded business or Lattice Semiconductor. And then finally, Mobileye, another acquisition, minimally profitable as measured by operating income. Mobileye designs chips for self-driving car and advanced driver assist systems. Here's where things get tricky though, because this product segment, the bulk of Intel, is profitable to various degrees, but then you have this massive manufacturing base that spans the whole globe. And this is what former CEO Gelsinger had really pinned Intel's hopes on. But so far in 2024, revenue over $4 billion a year, which is respectable, but losses so far in 2024, over $10 billion operating loss. This is about as close to a robbing Peter to pay Paul type of situation as you can imagine. If you're thinking your future does indeed lie with the Intel Foundry IFS manufacturing business, that would seem to be the indication given Intel applied for the CHIPS Act award. And in addition to that, Intel in the last couple of years signed deals with Brookfield Infrastructure and Apollo Group for them to invest and get nearly half of the future profits. And to boot, Intel's balance sheet, not so pretty, nearly double the debt that they have in cash and short-term investments on hand. For Intel, you've already invested a lot of money in manufacturing, just over $100 billion in property, plant, and equipment listed as assets on your balance sheet. We believe Intel needs to take parts of the profitable part of the business, the product design pieces, and begin selling them off piecemeal so that it can finish fixing the manufacturing business. A lot of these segments, if they were sold off standalone to a competitor, we think these could actually yield many billions of dollars that Intel could use to fix the foundry business. Intel maybe holds on to its most profitable core, the PC and laptop business. And as they sell off these different parts of the product businesses, they need to strike a deal with the buyer in which the buyer agrees to use Intel Foundry services for existing Intel products for X number of years, plus agree with the buyer that the buyer migrate some of their non-Intel products over to Intel Foundry services as well. We think this dual action of selling off the non-core product assets and striking manufacturing agreements with those buyers is the best way Intel can fix its manufacturing base and get itself competitive. This is not as pretty a picture as it could have been if Intel did this years ago, but it's almost 2025. Intel is an absolute mess. We think this is about the best looking path forward that Intel could take.